Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be making comparisons between price action and rate hiking and cutting cycles by the Federal Reserve. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com. There's obviously been a lot of discussion over the last year as to how Bitcoin will behave in a high interest rate environment. And one of the things that I've mentioned many times is that Bitcoin is likely going to be much more resilient than the altcoin market during this phase. Okay, and this is something that we've talked about many, many times. We've suggested that the dominance should ultimately head much higher for Bitcoin, and it helps sort of cleanse the market. But one of the things that I wanted to talk about in this video specifically is what has price action historically done during rate hiking and rate cutting cycles by the Fed. Now, unfortunately, we don't really have a whole lot of data to look at, right? We just don't. And, we could try to pretend like there's a lot of data and hope there's a lot of data. But the truth is we really have more or less one data point. Okay, well, maybe two. Depends on how you look at it. When interest rates are low, like 0.25%, Bitcoin does really well, right? That's clear as day. When interest rates are low and we have loose monetary policy, Bitcoin does exceptionally well. It's clear in the data, okay? There is an argument that Bitcoin is a measure of excess liquidity in our system. So if there's excess liquidity, where does it go, right? It goes to the higher risk things. And obviously crypto would probably be considered by most people to be amongst the most highest risk things, but that's why people like it, because it has the most, it has essentially the most volatility. And the further you go out into crypto, right, if you get into the altcoin market, you'll get even more volatility. That's why we're all here, right? We crave that volatility. We like that volatility, and that's what brings us all together. I mean, as much as we might all like to say that it's only the technology, let's be real with ourselves, right? It's the volatility that brings us all, and it keeps us interested in crypto, right? So one of the things that you'll notice, again, low interest rates, great for Bitcoin. But let's take a look at another period, and it might be somewhat surprising to you. What happened when the Fed raised interest rates? They started raising interest rates in December of 2015. When did the interest rate peak? December of 2018. So during this rate hiking cycle by the Federal Reserve that essentially lasted 3 years, what you'll notice is that the terminal rate corresponded to the bottom on Bitcoin. When they hit the terminal rate, that corresponded to the bottom. Now, is it as simple as that? Unfortunately, no, it's not. And the reason is because we are in a period of high inflation. You might say, well, are you suggesting that this time is different? I'm not suggesting necessarily anything. What I'm saying is, if you look at history, normally when the Fed's raising interest rates, market's going up. You see that over here in 2015, 2016, 2017. Look at it in 2004, 2005, 2006 when the Fed was raising interest rates. Market was doing quite well. Even over here in 93 and 94, right? Market was doing great. So then why this time is it different? And this goes back to that policy mistake that we've talked about before. And you might think, well, has been saying that last year's interest rate hikes was a policy mistake? No, I'm not. Last year's interest rate hikes, I don't think was a policy mistake. They were making up for the policy mistake they made the year before. And the policy mistake they made the year before is when the economy was stronger. I'm not going to say it was strong. I mean, loose monetary policy sort of has this intrinsic assumption that the economy is not that strong if it can't really sustain high interest rates. But when the market is trending higher and unemployment is at historic lows, that's normally the time you would be raising interest rates, especially if they're really low. One of the reasons is because if you don't do it, you can see periods of high inflation like we're getting right now. It's no surprise that if you go back to the 1970s, it also corresponded to historic lows with regards to the unemployment level. And look what happened. I mean, the unemployment level was very, very low in 1969, and then it just shot up like a rock over the next year. Or not shot up like a rock. It shot up very quickly over the next year to around 6% or so. So it can move up quickly if the Fed does too much damage. Now, again, the interesting part of all of this is that normally the Fed raises rates and the markets are going higher. But the reason they do that is because once the economy looks weak, once the stock market looks, I mean, they're not going to say they're doing it because the stock market is just because the unemployment rate is going higher or you're seeing weak data somewhere. Normally, when the Fed sees weak data, they pivot and they say, all right, we've gone too far. We've raised rates too much. We've rolled off too many assets from our balance sheet. We know the market cannot handle it anymore. So then they go back into quantitative easing, right? You might say, well, quantitative QE sounds good. It's like the drug for all the investors. But normally when they go back to QE, it's because they broke something in the economy, right? So if you go look at Bitcoin's price chart, they were raising rates. Fed was raising rates. Economy was strong. The S&P was doing well. Bitcoin was doing well. So don't say that Bitcoin can't survive a high interest rate environment. It has before, right? It has before. But the problem is that if the Federal Reserve pushes us too far, then what happens? We go into a downturn, right? And sometimes it's been a recession, sometimes it's not. 2018 was not a recession, right? It was not. It was just a bear market. What else do you notice? Okay, there's a few things to notice here. So the Bitcoin bottomed when the Fed reached the terminal rate, but also it hit a local top right before QE started, right before the Fed started lowering interest rates. So this is why I've said before, and I'll continue to reiterate this, a lot of people have been calling for a pivot for a long time. But remember, if and when the Fed pivots, it's because they have to, because they broke something, usually. So what happened? They started to cut rates. The Fed cut rates. But guess what? During the period that the Federal Reserve was cutting rates, Bitcoin was still going down. Which brings us to the point, and you'll see this in the stock market typically as well, is that the bottom that occurred over here occurred after the last rate cut, not the first rate cut. It's a key point, right? It happened after it. And if you go take a look at the S&P, so I'm going to go take a look here at the S&P 500 really quick. So if you go take a look, let me pull it up. If you take a look at the S&P 500, one of the things you'll notice is that this bottom in 2018 marked a pretty interesting bottom, but it wasn't actually the ultimate low before the Fed was done with that cycle, right? So take a look at this. The Fed was raising through here, and they were raising through here through. I mean, they were essentially raised from what, like 0 all the way up to 2.5, I believe it was, in a fairly short amount of time. It was over a few years, 0 to 2.5, and then during that period, we had that period in December 2018 where the market hit a local low, and then about 14, 15 months later, it went to a lower low when the Fed was going through quantitative easing, or they were cutting rates very, very quickly because they had damaged the economy. So if you go take a look at Bitcoin, what's interesting about this is that, and this it should not be overlooked, is that the S&P put in a lower low, right? So it put in a lower low from December 2018 to March of 2020. Bitcoin put in a higher low. So there was some relative strength there by Bitcoin compared to the S&P 500. Now, certainly didn't feel like it at the time. I mean, Bitcoin dropped like 60% very, very quickly, but that's ultimately what happened. So you had sort of you had a macro low in December 2018, right? A fairly important low that occurred at the terminal rate. We had this period here where the Fed was just holding interest rates at a fairly high level for the time, not raising them, but also not cutting them either. This sort of led to a transitory period where markets did quite well for several months. I mean, Bitcoin rallied, had a really great rally from like April until June or July. I mean, it started before that, but really the real rally that started didn't really start till April. I still remember watching Bitcoin, and I've told you guys about my experiences with Bitcoin, and just to provide another sort of anecdote, as I've said before, I thought 6K was the bottom back in 2018. I did not think we'd go any lower, and then we did. And I still remember buying down there, even though I'd already bought at 6K as well. What's funny is I still remember, I had my finger on the buy order at like 3,500 or something. And I was like, oh, I'll just wait, I'll wait another week and get it. I mean, I basically just DCA'd, but every once in a while I would try to get cute and time it a little bit more. I still remember watching the price, and it like rallied up to 4,000. I was like, all right, it's going to pull back here any minute. It's going to pull back and it'll go back down, and then I'll continue the DCA, and then it shot up to like $5,000, like that. And I remember just doing my weekly DCA at the time, being like, all right, I should have just done it a few hours ago before it rallied up to 5K. But what's interesting about this time is that it sort of marked a transitory period in monetary policy by the Federal Reserve, because it was sort of at the terminal rate. It was at the terminal rate, marked the bottom, and then before QE started, it marked the next local top, right? So you have to pay attention to that. This marked the bottom, and this marked the local top. This marked the next macro bottom. Now, this bottom here in March 2020 did not go as low as it did in December 2018. Now, we could argue all we want about, well, what would have happened had the Fed not printed, $6 trillion, right? I imagine things would have gone somewhat differently, okay? If the Fed just said, you guys are on your own, I imagine the charts would look somewhat different. But when the Fed prints $6 trillion in a relatively short period of time, of course it's going to have an effect on asset markets. We have to understand this. I mean, you print a lot of money, it's going to have that effect. And the other thing to consider too is that the Fed will eventually go back to printing money. We will go back to QE eventually. It's just that it might take longer than people think, simply because we're in a period of high inflation. So the next question, I suppose, is, and I'm just trying to get to the questions that I think would naturally pop up from some of this stuff. The next thing I suppose that you would ask yourself is, well, Bitcoin bottomed at the terminal rate, but are we even at the terminal rate yet? The first thing I'll say is that this comparison, it's not a perfect comparison. The Fed was raising rates during the bull market back in 2016 and 2017. They didn't start raising rates until we were already well in the bear market during this cycle. So unfortunately, it's not a perfect comparison as much as we'd like it to be. Had the Fed been raising rates back over here, then perhaps it would be a bit more of a better comparison to make. But the problem with this cycle by the Fed, the rate hiking cycle, is that they just waited too long to really get started. And so it's sort of thrown everything out of whack with high inflation, and the economy looks like it's getting sick, and you have the inversion of the yield curve, but the Fed doesn't care. And they're just saying, you know what, we're going to keep on going. We're going to keep raising rates. If you go take a look at what the markets expect, they're calling for a 25 basis point increase in February. Furthermore, they're calling for another 25 basis point increase in March. Beyond that, they're saying that the Fed's going to stop at 5%. I've said before, I think, back in 2022, I said I think the terminal rate's somewhere between 4 to 5%. Now, that seems obvious today, but back then it was at 1% or something, and most people were calling for it to not get nearly this high. Now we're already sitting at 4.5%, and we're likely going to make it to 5% unless something breaks first, right? If something breaks, then they might not, but it looks like we're going to make it to 5% by March at the latest. So the market is saying 88.5% chance as of today that we're going to have an interest rate hike of another 25 basis points in March, the end of March, to get the Fed funds rate up to 5%. If you go take a look at the May meeting, you'll notice that they still think it'll be at 5%, and they think it'll be at 5% in June, and they think it'll be at 5% in July, and then in September, still 5%. November, 4.75. December, 4.75, and even the 4.5 is outweighing the 5%. So what does that mean? The market is essentially saying the Fed will cut rates by the end of this year. They'll start cutting rates, which goes against what the Fed is saying right now. Now, I want to address two things here. First of all, there's the idea that you should, there's a group of people that say, don't believe the Fed. And there's a group of people that say, well, if you had listened to them last year, think about how much pain you would have avoided. Okay, think 2 years ago first, right? inflation is transitory, is what they said, right? Well, not even quite 2 years ago, right? A year and a half ago or so, they came out and said inflation was transitory. Now, had you believed them, then you would have probably thought that inflation would come back down quite quickly and they have no business raising interest rates to 5%. And if you thought they had no business raising interest rates to 5%, then it would still be risk on if you believed inflation was transitory, right? So clearly that was where the Fed got it wrong. Then we get to 2022 and the Fed says they're going to raise interest rates very, very quickly. And most people didn't believe them. Why did most people not believe them? Because normally, when the market starts to go over or the economy looks weak at all, the Fed pivots. So this is essentially all people have known for like the last 20 or 30 years, is that when something starts to break, the Fed pivots and they go back to QE. The mistake I think that a lot of people made was saying, well, just because they did that over the last 20 years doesn't mean they're going to do it when you have a period of high inflation. And you have to go back and say, well, what was going on during periods of high inflation in the past? And the Fed was raising interest rates during that time, despite what people really wanted them to do. If you go take a look at the Fed funds rate during those times, what you'll notice is that the Fed was raising rates, and then even once the market started to roll over, but then when they started to cut rates, the market continued down. With Bitcoin, all we have is like one data point here, There's all sorts of theories out there, right? I mean, you ask anyone, everyone has a theory, and they feel very convicted. They have a strong conviction. Sorry, they have strong conviction in that theory because they have data to back it up. No matter what it might be. But that conviction is based on on various things. If you're a bull, it's because this is around the time that things start moving again. If you're a bear, it's because you're looking at this and saying, well, how do we get out of this mess without having another major sell-off at some point before another bull market? What's interesting is Bitcoin does this many, many times, right? Like it has more than one capitulation typically, even after the bear market's over, right? I mean, you had a capitulation here and then another capitulation here, right? Over here, you had a capitulation here and then a capitulation here. So one thing here to consider, and I'm not going to have this go on too much longer, but here, this period right here is what I want to draw your attention to. I've heard some people refer to similar conditions today as sort of like the transitory Goldilocks period. I'm not really sure where it originated from, but I have seen those words sort of pass around Twitter and other social media platforms, right? A transitory Goldilocks period where inflation's coming down, which is a good thing because it means the Fed doesn't have to, doesn't mean it. You can sort of see the light at the end of the tunnel because inflation's coming back down. But why is it transitory? As well, there's this idea that what happens if we still go into a recession at some point, right? What happens if that occurs? You might argue that we're at a similar phase like that today. Now, someone might say, well, the Fed hasn't reached their terminal rate yet. That's true, right? And I mean, it's a risk, right? There's always a risk that Bitcoin has another downturn during, and the Fed eventually reaches their terminal rate. But the thing that I think is important to remember with all this, with Bitcoin price action and whatnot, is what is the lag time between the phase that we're in right now and when the Fed feels compelled to pivot, to go to QE? Because by the time the Fed goes to QE, again, they've likely broken something. And so from that point, Bitcoin will likely have some type of a sell-off. I mean, that's just what we've seen, right? I mean, there's only really one example of it, but when the Fed pivoted before, it was not good for Bitcoin. It went down, and we had about a 9-month bear market that started in the summer of 2019 and lasted until like March of 2020. And it was a very difficult time for a lot of people. It was a very uncertain time. We didn't know what was going to happen. I mean, it seems obvious in hindsight, but I mean, a lot of us were calling for a bull market. We had no idea exactly how it was going to transpire. I don't really think anyone did. But the thing is the bull market the real bull market that took us to new highs, when did it occur? After the last rate cut. After the last rate cut. So if we were to sort of go through an exercise, the Fed is likely going to keep raising rates a little bit longer. And it certainly is possible that market participants are sort of just front running this because they see it coming, right? And then it's going to level off for a while. So let's suppose that, you see this continue to go up for just a bit longer, and it levels off somewhere around 5 to 5.25%. The length of this time here will be very important. It'll be very important into Bitcoin's price behavior before I would consider to see a new sustained bull market to new highs. This period will be interesting because it would be somewhat similar to this period over here, right, between the December 2018 low and the summer of 2019 high, of this sort of like this transitory period where, as discussed today, right, inflation's coming down, but the unemployment rate isn't yet going up, and the U.S. economy still seems somewhat resilient. What was going on? What happened in summer of 2019? What happened then? Why did markets go? Why did the Fed? Why did the Fed pivot? Well, one thing that's actually interesting, and you might actually be surprised to know this, we've talked about treasury yield spreads before. If you look at the spread on the 10-year and the 2-year, we actually signaled an inversion in August of 2019 is when it bottomed, but the inversion first occurred, if we sort of zoom in here, August 23rd. That's when the inversion occurred. Where did Bitcoin hit a local top? June, July of 2019, right? June and July of 2019. So basically right when it inverted. Again, rate hiking cycle occurred over here during a period of strong economic activity. Unemployment rate, wasn't going up or anything like that. What's going on today? Fed's still raising rates. At some point, we're going to reach this area where the interest rates hit their terminal rate, and we just go sideways for a while. When it rolls back over, right? So again, increase for a little bit, goes sideways for a little bit. And then at some point, so the Fed is basically saying higher for longer. So markets are saying, okay, you're going to get up here, and then by the end of 2023, you're going to have to start cutting. That's what the market is saying. The Fed is saying, no, we're going to keep going, right? It's going to keep going like this. The reason the market disagrees with the Fed is because the market is saying, after such a strong rate hiking cycle, there's no way you can hold interest rates up here for very long before you break something. And if you break something, you're not going to keep interest rates higher for longer. You're going to go back to QE. So it's sort of like a game of cat and mouse. You have the Fed saying one thing, you have investors saying another, and we'll see what happens. My guess, honestly, my guess for the next year or so is it's going to wreck both the bulls and the bears. Is my honest guess. Is that and that's what 2019 did, and that's what 2015 did. It wrecks both sides. And that's sort of like a necessary component, I think, to gearing up for another bull market, is to sort of wreck both sides for a while. You chop them up for a while, right? You go up, you go down, you get the bulls excited, they make fun of the bears, then you make the bears excited, they make fun of the bulls, and you just sort of chop everyone up for a year, right? You chop up their portfolios, they get absolutely wrecked. And then by the time you get through all this mess and you get to the rate cutting cycle, everyone's portfolios have been chopped up, okay? We go back to QE because the Fed breaks something. You see some type of final sell-off, and then a sustained bull market can begin. Okay? So my thought is that this rally that we're in right now, that we're at Bitcoin's at 22K, I don't think this rally is the rally that takes us to new highs. Now, it might seem obvious, right? But there's a lot of people calling for crazy echo bubbles, and some people calling for new highs this year. I don't think it's a majority of people, but it is a theory. And one thing we've also learned too, though, is that it's kind of silly to just sort of dismiss any theory, because any theory could be right. Just because we don't just because I don't agree with it or you don't agree with it doesn't mean we shouldn't talk about it. There is a theory that just says that we're going to have sort of like some type of bubble, echo bubble, that's just simply going to take us back up, and this is going to get everyone to FOMO back in, and then maybe we'll see an early top well before we normally do. So that's a theory that's out there. I'm not saying that it can't happen. I struggle to see it being the most likely scenario to see new all-time highs that soon, mainly because Bitcoin shows us that, again, by the time the Fed cuts, Bitcoin gets that final sell-off, whether it's a lower high, a lower low, or a sort of a double bottom. That's where the final sell-off occurs historically before the next bull market occurs. And that's just going based on what we've seen in the past. And, I wish that we had more data to look at, because the problem with this type of analysis is that you're only really looking at one cycle here. And it's a very different cycle of interest rate hikes during a period where the market was going up. And now we're getting interest rate hikes while the market has been going down. So unfortunately, we don't really have a whole lot of data. We can sort of speculate all we want, but you can kind of see where Bitcoin sits right now. This period here will be a very interesting period for Bitcoin. We should see that period sometime in the next few months. I think the Fed will raise in February, probably raise again in March. And markets are not pricing it in right now, and I kind of understand why. The Fed reserves the right to go to 5.25 as well. And they've even talked about going to 5.25. Market doesn't really believe that right now. If the Fed goes to 5.25, I imagine they would hit that by May. Okay, but the market just simply does not believe that the Fed is going to 5.25. I mean, a small majority, maybe a third probability or so, but a majority of the market thinks that it'll be, somewhere between 4.75% to 5% is where the Fed will actually stop. So that means that interest rates will likely hit some type of a short-term top by March or May. Okay, so the terminal rate is likely going to be reached by March or May of 2023. From that point, the Fed will likely hold interest rates at that level for majority of this year, if not the entire year, and then they'll either start cutting late this year if the market is right, or next year if the Fed is right. Right? Place your bets. Place your bets on who you think is right. Last year, the Fed was right and the market was wrong. The year before that, the Fed was wrong because they said inflation was transitory. So again, it's a market. Place your bets on what you think is actually going to happen. So I will be really interested to see what Bitcoin does here over the next couple of months. As by the time we get to March or May, where does Bitcoin price sit? Because at that point could be an interesting spot if the unemployment rate hasn't started to deteriorate still. The main question that I constantly remind myself of is, how long does this phase last? Because this phase over here, when it went sideways, that was also, when Bitcoin was sort of in this transitory phase of it was doing quite well, despite the fact that you still had the inversion of the yield curve occur in the summer of 2019. And when that occurred and the Fed went to QE again, that's when Bitcoin sold off. By the last rate cut, that's when Bitcoin's real bull market began. Okay, so you always have some type of a low, and then you kind of can see another sell-off that occurs later on as well. So something to consider. I am kind of rambling at this point, but I did think it would be useful for us to sort of look at it in this context to sort of see, can Bitcoin survive high interest rate environment? Well, it has before. Okay, what happens when we go to QE? It's usually not a good thing. What happens when you get to the last rate cut? It's usually a great thing. Where are we right now? We're not even at this part yet. We're not even at the terminal rate. Okay, we got a long way to go this year. We're going to get to the terminal rate. We're going to go sideways for a while. The Fed will cut. By their last rate cut is when I would guess that that a sustained bull market will likely occur. I mean, and at that point, I think we can actually start talking about rallies to new highs and stuff. Where 60K, 70K actually becomes a real possibility again, and not just some, move back up to 25 or even 30K, right? And, some people call for 30K, and I've seen people call for, 35K, that sort of stuff, and people say it can't happen. Look, I mean, as bad as everything looks right now, you also know too that I mean, if Bitcoin can rally 4x over here, and if it can rally, 2x right here, so it's not unheard of, right? It's not unheard of for that stuff to happen. Whether it happens now or whether we go down again into the last rate hike and then it happens, it can happen. We've seen it happen many times. The strength of that move will likely just be dependent on the amount of time spent at the terminal rate before the Fed actually has to start cutting again. Again, a lot of stuff to take in. Hopefully you guys enjoyed the content. Make sure you subscribe, give the video a thumbs up. Check out Into the Cryptoverse Premium. I'll see you guys next time. Bye.